Our country's doing better by far than any other country in the world from an economic standpoint. We're the talk of the world. And we had a little glitch in the stock market last month, but it's still up, I guess, around 30% from the time I got elected. And it's going to go up once we settle trade issues and once a couple of other things happen.
That was the president just yesterday trying to explain the market tank in late December as a glitch. This third day of the new year wasn't better. The Dow ended down 660 points today, making it the worst start to a new calendar year in 19 years. A major factor was Apple's warning that it's expecting a slowdown in iPhone sales in China. Axios broke down what happened on Wall Street this way, quote, "This was a severe hangover from the Apple revenue warning tied to China's slowing economy, as well as Trump's economic advisor, Kevin Hassett, saying that other U.S. companies will have China-related earnings trouble until the trade war is resolved." That gets your attention. The president brushed off the notion that the effects of that trade war might be hitting home. Quote, "The United States Treasury has taken in many billions of dollars from the tariffs. We are charging China and other countries that have not treated us fairly. In the meantime, we are doing well in various trade negotiations currently going on. At some point, this had to be done." Well, with us to talk about it, our friend, the veteran financial journalist, CNBC senior analyst and commentator, Ron Insana. So he says we're the talk of the world, and
he's probably not wrong about that.
We're doing very well. And I know you don't love prognostications.
Yep.
How worried are you, by way of asking how worried everyone should be?
Well, I think the risk of recession or growth recession or global slowdown is going up by the day. China appears to be weaker than most people thought. Apple is evidence of that, although Nike's doing quite well in Apple in China, we should point out. So differences in product may have different results in China, but China is weakening. Germany had a negative GDP last quarter. Japan had negative GDP last quarter. We could be slowing down to an under 2% growth rate this year as the effects of the tax cut wear off. And the financial markets are telling us that. We're seeing stocks drop precipitously. We're seeing interest rates come down, and we're seeing economically sensitive commodity prices fall. All of that tells us that financial market investors, who are pretty wise about these things, are anticipating much slower growth in 2019, both at home and abroad.
Was it especially impactful because this is not an all-the-way back day yet? You look around New York, it is clear people aren't all back at work. It's the third day of the new year, after all.
Yeah, I go back and forth on these issues about, thin market conditions and
yeah, but I love asking.
The generals aren't at the desks, the soldiers are.
Yeah.
But computers run a lot of things, and we have cell phones and other devices that can keep everybody in constant communication. So this was a big worry, and this was a big surprise as well. Apple has now lost almost $450 billion in market value after having topped $1 trillion earlier in 2018. So it's a significant decline for Apple. Its suppliers fell sharply, and global markets fell on this as well.
Let's talk about Apple. The standard of growth for them is insane because of what Steve Jobs, the legacy he left. With every new phone, if it doesn't have a bread-making attachment, we're disappointed. Yeah. And they're also asking $1,000 for some of these iPhones. That is a lot of money on a product that is now under incremental change. It gets slightly cooler with each new generation, but the iPhone is still the product Steve Jobs left us with.
Yeah, and the phone companies have stopped subsidizing the purchase of phones, which Tim Cook, in an interview on CNBC yesterday, acknowledged was an issue. Pricing was an issue. The slowdown in China was more profound than they'd anticipated. The trade war is having an effect on their sales. So there were a whole host of things that added up to their surprise announcement after the close yesterday, and they had their worst day in 6 years today, down almost 10%. That's a pretty big move for a company that, at one point was worth $1 trillion and is now worth, again, $450 billion less. But it's also indicative of other problems that we're seeing. The stock market decline. Today, we got some manufacturing data that was far weaker than expected here at home. That had an impact. What you quoted Kevin Hassett as saying had an impact. He also said that every 2 weeks that the government is shut down, we lose 0.1% in GDP growth. That's not insignificant if this thing starts to go on for months.